The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners had a great and fun and exciting weekend. We apologize for the delay in our schedules, but everyone had conflicts on Monday, so we rolled our recording date here to Tuesday, and our listeners will be hearing this on Wednesday, so a few days later than normal. But other than that, you're getting the same quality show you've come to expect.
Hey, Mark, why don't you just stay late tonight and get it edited out tonight for our
There we go. We'll stay very late tonight.
Yeah, I like that. More work for Mark.
I'll send that to our editors, and I'll be sure.
The last podcast had about 9 or 10 different edits throughout the whole time, so it was a tough one.
You know, when our editors hear that, I'm sure they'll be very inclined to add more John Grigas to upcoming shows. They won't be inclined to cut you out anymore at all.
Not at all. Not at all.
But yeah, I am your host, Mark Longo, for this roundtable extraordinaire through the world of options. I am joined by a strange gaggle of fellows, starting off with the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Sebastian, how are you doing this fine Tuesday afternoon?
Oh, I'm doing wonderful. You know, we got a nice 12-handle rally in the S&P 500. Vol is not down, but the VIX is down. And, you know, I think I'm flying out to some country in the Middle East to go to some fun rally on Saturday. I'm getting kind of excited.
And if listeners are wondering, Mr. Sebastian is joining us via cell phone today, which is why he is even tinnier than usual.
Yeah.
And listeners,
John, you just bring the marshmallows. So
I'll do that.
That's the one thing that we need.
And listeners may also recognize the sultry tones of that other voice. That is, of course, Mr. John Grigas himself from Options Express. Mr. Grigas, how are you doing today?
You know, quiet day out there today with no numbers and pretty much relatively calm in the Middle East. This put a little quotes on the calm, but you know, it was a pretty quiet day with economic numbers. The market's up. That's good. I'm still trying to short it. That's bad. But other than that, things are good.
I figured you were taking your money and run after yesterday.
No, I'm stubborn, and you know, if you look at the week and the last 7 trading days, it seems to go down one day and up the next day. So there's no follow through on either end. It's definitely been range. It's great for day trading. There are areas where you can make money being short the market. It's just you can't hold it. You can't hold it overnight.
No, especially tough if you've been short since about 1150 in the S&Ps, like you have been, I'm sure.
Not quite that low, but you're within striking distance of that level.
And then finally, last but not least, we have the man from the mountains himself, Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how are you doing this fine Tuesday afternoon?
Doing well. Yeah, we're excited. Markets are up today, and there's a lot of things going on with individual stocks that we can talk about a little bit during the show today. And yeah, it's an exciting day today when the markets and the phones are ringing. It's the bat phone.
With our lineup complete, we will close out the old banter block and roll right into the trading block.
The trading block.
And welcome to the trading block. This is the section of the show where we discuss what's going on in the broad market and what's catching our eye amongst today's activity. And as we alluded to earlier, it was another bounce-back day in the markets. The yo-yo market continues up one day, down the next. Today, the S&P closed up almost 12 handles. The Dow closed up 125 points. NASDAQ up 20, and the VIX cash down 0.86, though, as we've discussed before, the VIX cash is indeed a dubious measure of volatility. As most of our listeners probably are aware, today's bounce back is due to some of the relative easing of tensions in Libya somewhat and the subsequent sell-off in oil. And I know, John and Mike, you guys watch the commodities quite a bit, so what has the last few days been like for you guys watching this oil just all over the map these days?
Well, I sure as hell wouldn't want to be short right now in crude oil. I think I had mentioned something when it was below 100, but that just got blown out of the water. And when you have these fundamental things happening in the Middle East, I mean, it's good to be a day trader. I'd be in there scalping. You have a lot of volatility. There's a lot of opportunity. I mean, 10 cents on one contract in the 1,000 barrel of crude oil, it's $100. You do that a few times a day, maybe with 2 or 3 contracts, you're fine. I wouldn't be position trading this right now just because of the volatility and the fact that I like to get 7.5, 8 hours of sleep a night. How about you, Mike?
7.5 to 8 hours of sleep? I thought you said you had little kids. Good gosh, you're greedy.
Well, that's why they make that NyQuil. Kids seem to sip that and they go right to bed. Problem solved. See you in 12.
Gosh, that's the way to do it. Yeah, I would not want to be short crude right now at all. I think that just with it coming up the way it has, with it over 100 like it is right now, I think the bulls are in charge in terms of position trading it. We don't have any positions in oil itself. We have some oil stocks that we're doing some things with, but we don't have any positions in crude itself. So it's definitely been quite the ride this last week and a half with what's going on in the Middle East. But I would definitely not want to be short it. That's for sure.
Hey, Sebastian, I know you guys mostly focus on equity and index options, but do any of your mentoring sessions ever focus around the commodities and futures options?
Of course. We were looking at different types of ways of trading oil, and I'll tell you, I'm interested. Just the fact that the entire world is bullish oil is starting to make me get bearish oil. I know it sounds silly, but I think that I wouldn't be shocked if we tested 100 before we pop back to 110, pop through 110 in the West Texas or the light sweep. So one thing we were looking at was ways of kind of using oil's commodity skew, which means calls are more expensive than puts, as a way of getting long gamma and short and really not paying a lot of premium if as oil rallies or even as oil falls. And I think it's a really interesting play. You just have to make sure that oil doesn't move too much on you, or a 1-by-2 ratio spread is going to be a little more painful than you're going to be so excited and you'll be crying. That's painful. So, but it's definitely something we've been looking at.
And Mr. Tusaw, speaking of yo-yos, there's been a lot of vacillation these days in Ford. I know you guys are long Ford. Are you long the underlying, or just are you collared? Are you short downside and waiting to be assigned? What are you guys doing out there in Ford right now?
We're long the underlying, and they had a pretty big day today. They're up over 3% on the day today. They announced a new compensation package for their CEO. And basically, they're paying him some pretty decent cash, and it's pretty generous according to at least what the spin doctors say and all the news articles out there. But I think with that, Ford's more of a longer-term holding for us. We're long the underlying. If it starts coming up a little bit more, if it gets back into the 16 level, we plan to start selling some covered calls against it again. Weekly premium on Ford is pretty generous right now, so it might be if you're not in Ford, it might not be if you're looking to get into Ford, selling a weekly put might not be a bad idea. For this week, it might be a little bit too late now, but maybe next week, something to consider.
Yeah, we had the same idea. We've actually started to use those weeklies to potentially leg into some forward positions on the 14 strike because, like you said, it has been some decent volatility in premium levels. Even in this market when volatility is generally declining and low on a lot of issues, you can still get a lot of bang for your buck to work some limit orders in Ford. So we've been doing quite a bit of that lately as well. And, of course, it wouldn't be a trading block if we didn't at least mention Apple. I know, Uncle Mike, you are still long Apple out there for a lot of your clients. Unfortunately, we didn't really see the that bump a lot of people were hoping for materialize out of the iPad 2 announcement. So that's kind of the big thing they had on the horizon for them. Are you still long Apple here? Are you starting to flatten out maybe or write some upside against this? What are you doing for your clients out there in Apple?
Well, what we're doing right now, we're actually long Apple in a lot of cases, and we have some protective positions in different ways for different people. Just from the standpoint that the ratio spreads that we were doing with the weeklies have pretty much flattened out for us. So the premium there, it's not making sense anymore for us to do so. So we're basically just long Apple and long downside puts. I think that Apple's more of a long-term hold for us still. We think that with everything that's going on, that it does have a chance to continue to go higher. It's testing the 360 levels, not as we speak, but it's getting closer to testing the 360 levels again, and we're only $9 off its all-time highs. So I'm still an Apple bull.
It's amazing to say Apple at 355, pushing 360, that it's still a long-term hold. It's amazing.
Yeah, so right in the middle, is Apple going to be 400 before it goes to 300, or what do you see? Who wants to stick their neck out?
Uncle Mike is obviously betting on the 400 level.
Well, if it's not, then that's why we have puts on it in case we're wrong. So, yeah, I think it would go to 400 before 300. I will stick my neck out for those of you going to the anti-American rallies this weekend.
I was talking to someone the other day who follows a lot of tech names, and they were saying we were talking about the days in the mid-'90s, the dark days for Apple when the stock was below $10, might have even gotten down to around $2 at one point, and there were calls for the company to pretty much close up shop and give the money back to the shareholders. Things were looking so dire, and that's why it's so funny now after having that conversation to hear you say, "Oh, 350, we have a lot of upside left." It's what a different frame of reference we all have on Apple these days. Whatever happened to that 5-strike thing you were talking?
Flipped out of the out of the Christmas tree, kept the call, and then sold a 2 calls above and bought another call above that to convert it into a butterfly for a $1.35 credit. And right now you could sell it back at I want to say 70 or 75 cents. So nice little win.
We'll take those.
Yeah.
All right, and that's going to do it for the trading block, and we're going to roll right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the section of the show where we discuss the interesting and/or unusual options activity that's lighting up the tape today. And we got a fun one to start it off with today. And we like to find these little names every now and then because these tend to really personify what we mean by unusual activity. And we have a good one today. It is Live Person Inc., ticker symbol LPSN, excuse me. And this is a provider of text-based chat software for internet users.
Hey, don't let full disclosure. That's what we use here at Options Express for your live help. So
is it really? Oh, well, there we go. So, Mr. Grigas is maybe it's you gobbling up all these calls.
It's a great. We never have problems with it. It never crashes. It's stability-wise, it's great, and we haven't had a problem. I like it. So I guess if from a personal standpoint, where I use it on a daily basis, I mean, we do 600-700 chats a day on Live Person.
This reeks like a product Cisco would buy out or something like that.
Something like that, because someone obviously shares Mr. Grigas' bullish sentiments on this one, because this is a name that does, well, first off, it closed today at $11.04, up about 5% to up 57 cents. And this is a name that does about 60 contracts a day, so it doesn't trade at all. And today they did almost 3,000.
Oh, my science.
So this is serious, unusual activity here. And so when we mean unusual activity, this is what we're talking about. And most of this activity is bullish with traders just gobbling up April 10s and 11s. So far, we've seen both strikes doing over 3 times their current open interest, with the bulk of it lifting offers. Today's volume was about 2,880 contracts on the day, That's over 40 times the average daily volume, and it has surpassed the total open interest on all of the listed options so far in LPSN.
Hey, Mark,
so
you said the April 10s and what was the other strike?
April 10s and 11s.
April 10s and 12.5, and the
12
July 12.5.
Okay.
I'm sorry. Yeah, our guy wrote it up wrong. It's April 10s and 12 halves. And
tell that guy to step into your office because he's fired.
Yeah.
You and Mark Longo, one wrong strike, and you're gone.
He made a fool of me for the last time. But, April 10s and 12 halves. I'm looking at the numbers today. About 1,800 on the 10s went up, and nearly 800 of the 12 halves. Also 200 of the July 12 halves, which in and of itself is about 5 times their daily volume. So that in and of itself is a big trade for this one. There's not much real news out there. They're being listed in Tel Aviv, so that of course is going to drive a lot of bullish activity. And they're participating in a few conferences, but other than that, it's not even at the upside of their range. You know, the upside of their range is about 12.5. They're trading $11 right now. So these guys are expecting it to push the upper side of its range in some substantial size. I kind of agree with Mark on this one. I think someone thinks they have some rumors about someone coming in to gobble them up. John, it sounds like you know more about them than any of us. So have you heard anything about these guys or any potential mergers on the horizon for them?
No, I mean, the acquisition rumors have not heard anything. I mean, you can see by the people that trade this and the amount of volume it does, we don't get call one on this option at all.
Yeah.
But using the product that they have.
Somebody got called 2,800 today.
Yeah. So I wouldn't want to be on the other side of it either. That guy's probably sweating little bullets, right?
Yeah, no, you gotta think that. I mean, I would think either Cisco or Google. This would be a perfect, a good one for Google. Maybe is more, I think you'd think Cisco, right? The kind of computer network, kind of communications type of approach. This doesn't seem like an exact fit for Google because it's a little less consumery, but or maybe even Microsoft Enterprise might be another idea. So
this one is kind of reminiscent of the one we talked about earlier this month, THC, where a lot of surprise bullish paper came out of nowhere. That one so far hasn't really paid off. It's still hovering around, let's see here, closed today at $7.13, and they mostly picked up March 7 calls, so they need this thing to take off quite a bit before those calls pay off. But this one looks like someone is preparing for some sort of potential M&A activity, and not too far off, primarily in April out there. So they're expecting something in the near term to pop there in LPSN. We'll definitely keep it on our radar, and we'll watch it and see if this guy is right and this is actually an insider who knows something. And we can close out today's abbreviated odd block with actually a review of some activity that went up yesterday. But, of course, we didn't record yesterday, so we'll talk about it today. This is, of course, in Applied Materials, AMAT. They closed today at $15.79, down about 1% or 17 cents. And this is a name that, of course, they're a semi-name. And Wells Fargo, we love our analysts. They lowered their expectations on this one yesterday, and so that sent the shares moving quite a bit, even though they were pushing a 52-week high earlier this week. And we saw yesterday a lot of bearish activity on this name. This is a name that does about 14,000 contracts a day, so this is not a small name, certainly not 60 contracts a day. And we saw a lot of activity in the April 15 puts. The first one we saw coming in, the first first session come in and picking up about 10,000 of these for 34 cents, followed pretty shortly thereafter by another block of nearly 9,000 for 40 cents. So almost 20,000 of these April 15 puts were picked up yesterday. Not surprising, that has bumped up the implied vol on that strike about 8%. And we saw total volume yesterday over 3 times AMAT's average daily volume. And looks like it was a reverse 5,000 calls versus 36,000 puts on the day for AMAT. So generally bearish activity looking up yesterday in AMAT. Aside from that analyst downgrade, nothing else really going on. The next round of earnings isn't until mid-May, so this guy isn't positioning for an earnings downside move. It's just obviously thinking there's some serious downside to go ahead in AMAT. Any of you guys follow this one?
No, I'm not too into Applied Materials. I who knows? Just looking at a chart of this, if you think it's going up or down, this is a good opportunity to sell volatility. It's at a kind of sitting on a 6-month high. So, that might be an interesting vol sale if you really think this thing is dropping. We haven't seen it the vol get this low since before Thanksgiving, when the stock was actually to a good 20% lower than it currently is. So, an interesting volatility sale.
Yeah, so if you want to take the other side of this one and sell some of these puts, then go crazy.
Or if you want to go with it and sell some calls,
There you go. Be the savvy person out there.
Exactly.
That one
straddles.
Or do one of your 5-strike Christmas trees. There we go.
There you go. It's called the Christmas tree.
Make your broker happy. Why do 5 contracts when you can do one?
Exactly. That's what I always say.
And this show brought to you by Options Express. All right. And with that, we will close out this abbreviated version of the odd block, and we'll roll right into the Express block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread block. This is the section of the show where Uncle Mike and the Greasy Meatball and myself get to sit back and relax and pop open a nice cold frosty beverage, and we get to hand the reins of the show over to Mr. Grigas over there in Options Express land and let him run wild. So, Mr. Grigas, the show is yours. Do with it what you will.
Okay. Today, thank you very much, Mark and Mike and Greasy Meatball. The activity today was mute, was quiet. I know we finished up about 124 points, but the phones are relatively quiet. Calls that we did get in the equity markets centered around Bank of America. If you didn't see the news article that came out, they had an investor conference today, and it was pretty bullish comments and sentiment down from the CEO, Brian Moynihan. Talked about targeting growth of 6 to 7%, stock buyback, special cash dividends, regular dividends increasing, and it really benefited the stock today. So we had a lot of people coming in looking for long-term growth, buying some of the long-dated options and actually some of the leaps. If you take a look at Bank of America today, as I just get logged out of my own account because I brought it up on the other computer, I believe it was up about 4.5 to 5%. Closing in around $14.69, so up 66 cents, which is pretty good. So we had a lot of people coming in there buying vertical spreads, even some calendar spreads, buying some long dated leaps. The sentiment from the retail crowd was this was a pretty bullish sign. Some of the analysts out there said that they were going to return to normalcy in about 2 years when this, when they get some of these toxic mortgages off their balance sheet and return to normalcy, and that the stock should see continued growth in this environment as well as the long term. I did want to bring this up for Greasy Meatball, but he may, I know, be doing a webinar for the ICE while he's doing this show. So Urban Outfitters, I know, was just one of his favorite. We also got a lot of calls on Urban Outfitters today.
I'll pretend to be him. Ooh, Urban Outfitters. Ooh, Chico's. Ooh. I love them so much. I also love Procter & Gamble so much. There you go.
I need to get a tight T-shirt with a funny remark on it for my weekend partying. They, I believe, came out with earnings after the close on yesterday. Didn't do very well, as you can see that the stock price got pummeled today, down $6.33, almost down 16%. Looking at the Newswire on the Options Express website, you can easily find that the Q4 earnings. Let's see. So far as stock hit a low of 31.80 and a high of 32.84. Analysts forecasted a profit of 52 cents a share. Obviously, only came out at 44 cents a share, which I know when I lived in the urban city of Chicago, Illinois, for 10 years. I used to go in Urban Outfitters all the time. They have great clothes that they make for about 10 cents on the dollar, and then they mark it up to about 10 times that. And these kids eat it up. But why they're having a bad quarter, I don't see why that would be the case. Greasy Meatball, aka Mark Longo, what do you think about Urban Outfitters?
I love some Urban Outfitters. They always have weird little side things aside from the clothes. I know. Actually, I remember for a long time, for whatever reason, there used to be Urban Outfitters near me down in Lincoln Park where I lived. And whenever I'd walk by that store, this is well before the Michael Bay movies came out, but they had a little shirt in the window all the time for years, and it had a little Transformers symbol on it. And it was very subtle, and they had it just in the corner window there for some reason. They were just marketing a small line of Transformers logo. It's kind of like an Izod shirt, but instead of the alligator was a Transformers logo. And it always cracked me up because it was very subtle, and you had to really watch the show when you were a kid. Now, of course, everyone's seen the movie, so people would recognize it. But this was long before that, so that always increased my esteem for Urban Outfitters, just because they had silly little things like that.
And like we've all established, we're all big fans of the Transformers on this site Michael Bay, as you said. I think we all still own a large majority of our toys from childhood.
G1 Transformers, as the kids
OG.
I'm looking at the numbers here for Urban Outfitters, and this is the name that averages about 2,400 contracts a day. They did over 18,000 today, so obviously the post-earnings announcement and the subsequent move to the downside really drove some volume in that. Surprisingly, not as bearish as you might think. It was only 1.4 to 1 puts versus calls on this one, and it wasn't really wasn't a lot of lifting offers on puts on this or hitting bids on calls. Actually, there was a little bit of hitting some bids on calls. About 41% of the activity on the call side was hitting bids, so that's a little heavy there. But in terms of lifting offers on the puts, only about 29% of put activity was that. So you think it'd be a higher for a day like today when the stock's down 17%. You expect to see a lot more one-sided paper than we saw today. So interesting.
Yeah, I mean it's a niche company. I think they have an opportunity to bounce back to this. Like Coinstar and other companies have carved out a little bit of a unique market. I mean it's a different store than your Gap and your other big box retailers.
Retail, though, I mean, Sebastian aside, retail is such a beast. I mean, you have such a fickle audience you're dealing with. And one week, you're the hot store, and then the next week, Abercrombie or someone else comes out with their latest catalog of semi-naked tweens, and then they're the hot store for a few months, So it's a difficult market to, I think, maintain long-term growth in.
No, you're right. 1 week hot pants, the next week bell bottoms. You just don't know. As far as futures, a couple of products that you don't hear too much about. Lean hogs, I had a couple calls on them today. Yes, people still do trade lean hogs. Obviously the median age of there is about 82, but people still do trade them. The front month April lean hog limit up today, which is 3 cents, and then you have it going out to July of 2012, where it was only up a dime, but obviously that's the kind of move you expect that far out. But and then just in the opposite direction, cotton, which we've talked a lot about on this show. If you take a look at that chart, cotton only literally trades limit up or limit down these days. It's in a nice channel. It made a new high 2 days ago, and then went limit down today. So I mean that's the kind of market you have to have very large guts to go into this type of market, since you don't want to be trading futures. The futures margin I think is almost $12,000 now. But I did talk to a gentleman who was long some puts, bought him at the high yesterday. I mean, this guy, if he can get out, is going to do very well, because this thing just may go limit down for 3 days straight, and people will be dying to sell it to him.
I used to trade with a guy, or I knew a guy from the SIBO who was like a lifelong SIBO guy for years, and he traded at the Merc for a while too. But he was mostly an equity options guy. And then a few years ago, for some strange reason, he went out into the lean hogs out on the CME, and he said, this is a guy who had been trading for 20 odd years. He knew his stuff. And he said he was just completely at sea in that lean hogs pit. He just could not make heads or tails of it. The paper was bizarre, completely one-sided. You had to know who the players were to really, take down any sort of size out there. And he was just completely overwhelmed. I think he was out of there after a few months. This is a guy who had been trading, for 20 odd years and all variety of equity and index products, and yet lean hogs completely flummoxed him.
Yeah, it's a good point. It means you may master one thing, but it's, you can't apply that strategy or that trading plan to another product. Every commodity or every trading structure or product is its unique beast. And then there's something I mentioned last week too, that we're rolling out OX Social. I thought maybe I could, if Mark could get any feedback from his listeners in general, or from the listeners to our show. We have 3 market insights out on OX Social right now. They're all real near term. We had talked about the DOE EIA Energy Stocks Report. I believe it's tomorrow at 9:35 Central. We have a market insight question out there. Will the March 9th EIA Energy Stock Report show an increase in U.S. crude oil inventories? 62% people are saying it will show an increase. We also have a retail sales figure one out there as well. And everyone seems to be the favorite. This is the one that has the most votes. Will Libyan leader Muammar Gaddafi either resign or be removed from power by March 15th. We have a lot of people going either way on that one. So we got 54% saying that he will be removed by March 15th. So I think, as Sebastian noted earlier in the show, we'll be out there. We hope to see you out there at those March 11th rallies. Bring your American flags, bring your gasoline. It'll be a good time for everyone.
Just as a word of caution to our listeners, don't go to oxsocial.com. That is indeed I just did that for curiosity. And it is a social club and teaching institution focused on developing top flight social skills in pursuit of better romantic and platonic relationships. So if you want better romantic relationships, by all means go there, but don't expect any good options insight while you're there.
OX Social is embedded in the private side of the website, so you do need an account to participate, but you do not need to fund the account to get into OX Social. Pretty exclusive club right now, but I'm sure get in while you can, because membership is limited.
Yeah, I think that's a good point for our listeners. We'd love to hear your feedback on the OX Social, and as well as any other topics we've discussed on the show today. Give us a call, 312-544-9356. Hit us up on Twitter. You can hit us up directly at the Options Insider at twitter.com/options. Send us a DM. Love to hear your insight on that. Post in the forum, theoptionsinsider.com/forum. Scroll on down to listener questions for the option block, and you can post them there. Or just call John up himself on the trading desk and give him your insight one-to-one. Either way, we'd like to hear what you guys have to say about all of this stuff.
That pretty much wraps it up on the OX Trade Desk. We've got some numbers out tomorrow. We're looking for, I kind of agree it might be a quiet rest of the week, where people try to maybe, delta neutral their positions or trade out of some positions ahead of this rally this weekend. That's it for me, Mark. Back to you.
Back to you in the studio, Tim. Storm McGregor, or whatever the hell they call these anchormen these days.
The guy, his last name is Rainstorm or something like that.
Something like that, yeah. All right, and that's going to do it for the old Express/spread block. And with that, we will roll right into the strategy block.
The strategy block.
Welcome to the strategy block. This is the section of the show where it's Mr. Grigas' turn to take a break. And I can take a break as well, because I have that host prerogative. And we can sit back, and I'll open another frosty beverage, and I'll proceed to get inebriated by the time the show is finished. And we will listen to Uncle Mike Tusaw's strategy of the week. Uncle Mike, what do you have in store for us today?
A couple things, actually. As you guys are sitting back enjoying your frosty beverages, up here in the mountains, we're taking a look at some just ways with which you can have protection in your portfolio. Now, I've run into people throughout my years in the business that have had a 401k, and they've not been happy with the selection of what they can do within a 401k through their work. Reason being, you're stuck with mutual funds, maybe there's high sales loads on them, or for whatever reason, it's just not working out for them. One thing that we've been telling people, though, if you want to trade options within your 401k, you can do it, just not in your 401k, so to speak. I'm sure there's ways with which you can trade options in your 401k, but that's not the purpose of today's strategy block. Let's say, for example, that you have $100,000 in your 401k, or let's even make it easier. Let's say you have about $130,000 in your 401k, and let's say that you want exposure to the S&P 500. You want all of it to be market exposure, let's just say, in theory. Now, I would never recommend that to any client. You shouldn't put everything in the market, but for sake of easy example, we're going to say that we're putting everything into the market right now. For $130,000, oftentimes within a 401k, you can buy an indexed mutual fund. An indexed mutual fund will track the S&P 500 or whatever index it's supposed to track very closely. If it's an indexed mutual fund to the S&P 500, then if the S&P goes up 10%, your fund will go up 10%. If the S&P goes down 10%, then your fund goes down 10%. The goal of an index fund is to match the performance of the market. And usually it's within about 10 basis points, so it's usually very close. Now, let's say that you're in this mutual fund and you've ridden the rally. Let's say that you've been in it since early last fall or late last summer, and you're thinking, you know what, we're getting a little bit top-heavy in the market right now, and I'm concerned that my index fund is probably going to pull back a little bit. Now, I could sell it and then convert my money to cash, but I don't want to do that because what if this rally continues? Well, now might be a time to consider a protective put. Now, you might be saying, Uncle Mike, how can you do a protective put in a 401k? The problem that you had just mentioned was that I'm struggling to find choices within my 401k. Well, here's the way with which you could do it. Do it outside your 401k. For example, the SPX, the underlying contract or the underlying index that tracks the S&P 500 has index options that trade on them. So let's say that you were to buy a put option on SPX. Let's say you bought one put option. If the SPX went to zero, that one put option would be worth close to $130,000 because that's the approximate value of the SPX right now. And hence the reason I used $130,000, in case you hadn't figured that out already. Now, let's say, for example, that, you know what, just buying a protective put, that doesn't work for me. Well, perhaps you could buy a put spread, maybe do a diagonal put spread. There's a variety of ways with which you can protect your retirement money, and the protection section of your portfolio can just be in an Options Express account, and it doesn't necessarily have to be in the portfolio. Now, with that, the final benefit of doing this would be the 60/40 tax treatment that would exist on SPX options. So let's say, for example, that you bought a call option on Google for $100 and you sold it for $200 a week later. Well, if that's the case, your tax is going to be 100% at the short-term rate. However, SPX has what's known as 1256 tax treatment or 60/40 tax treatment. So let's say, for example, that you make a $100 profit on SPX option. Well, $60 will be taxed at the long-term rate, and $40 will be taxed at the short-term rate. So when doing so, you do get a potential tax benefit by using an index option outside of an IRA. Now, if you have a smaller IRA and you maybe want to use that as kind of a hedging mechanism of some sort, by all means, there's no law that says you're not allowed to do that. So that's another way with which you can consider this. Now, let's say, for example, that maybe you want to do a collar. Well, if you want to do a collar, it's kind of difficult to do it on the SPX because it's such a big contract, and if you have a smaller account, the margin requirements for doing a naked call might not work out. Now, what I mean by doing a collar on the S&P, if you were to do the strategy with which I'm proposing, buy a long put in a brokerage account and then sell a naked call, it's a collar that's not really a collar. In the eyes of the broker who's holding your non-401k account, the call's naked. However, you know that the call option, if the market does go higher, even though you're losing in the non-401k account, you're still winning in the 401k account, and it acts kind of like a complicated covered call, for lack of a better term. So let's say that you're looking to do something along those lines. You can do that, and if you're looking for a more generous margin requirement, perhaps you may want to consider doing these on the S&P E-mini futures options. So there's a lot of choices with which you have. The thing that we like to recommend to people at Know Your Options is that you look at the total portfolio. Don't just look at one section of it. Make sure that you have a plan for the entire portfolio, not just your small trading account. Make sure you take everything into account. And that is the strategy for today from the mountains.
Thank you, Uncle Mike. And with that, we will close out the old strategy block and roll right into Around the Block.
Around the Block.
And welcome to the Around the Block segment. This is the section of the show where we discuss what's on our horizon for the next few sessions. Pretty light in terms of economic calendar. I know we have oil inventories coming up tomorrow, but I imagine most of that, if not all of it, that activity that would come from that will be subsumed, and everyone will be waiting for this great day of rage on the 11th, on Friday, to see what actually develops there. I was just reading through some analysis of what's going on in the oil futures market, and they're saying that the speculation is getting so hardcore on this ahead of this day of rage that it's looking like open interest, and they're not stating here specifically what months they're talking about. So I always take this kind of stuff from general media when they're talking about derivatives with a grain of salt, because I usually don't know what the heck they're talking about. But they're saying here, I think this is from CNN, the speculative fervor is so remarkable that we're seeing about twice as much long open interest in oil as we did back in 2008 when oil spiked to 147, back in that summer. So looks like a lot of upside and a lot of long open interest right now ahead of this day of rage. We're hearing a lot of people running off at the mouth about oil at $200 a barrel. That sounds insane on the one hand. On the other hand, if Saudi Arabia does erupt, that may not be too far from what actually happens. What are you guys doing to prepare for this day of rage? Are you loading up on upside calls in oil, or just picking up some futures in general, or what are you guys doing?
Like I said earlier, I can't sleep at night when I have a position on, so I'll probably be in there scalping, one lots or two lots if I can afford it. The volatility is great right now. I mean, you get a little bit, if you're a good technical intraday, market profile reader, these last 2 weeks in the oil market is like the gold, early in 2010. I mean, it's very volatile. It's a chance to scalp and make some money and limit your losses. When we had QE2 come out, 2 days before it was announced, everyone knew it was coming. That's when the 10-year note and mostly the 10-year note, but additionally the 30-year, kind of topped out. So sometimes, as Mark Sebastian has said before, these days, buy the rumor, sell the news. This rally is the 11th. I'm not sure what time that corresponds to us during the day on late Thursday or early Friday, or what that, what the exact time will be. But that may be a point where we either take off the upside or go down, and maybe most likely down. I mean, like you had said, the long interest and is greater than it was in 2008. I mean, when we went up to 147. You could see a big move down when you're flushing out all these longs.
Yeah, that's probably the better question. Everyone's talking about potential upside in oil, but let's say 5 guys show up on Friday in Saudi Arabia and the thing's a huge bust. What are we seeing on the downside then in oil is probably the next big question.
Yeah, I mean, look at the dollar index too. It hit good support at 17.5. I think it broke it by 2 ticks, so I would say it found support there. Had a nice bounce yesterday. Oil's still priced in dollars, so the dollar gets stronger. It should weaken the oil slightly. The euro hit resistance at 140 last week. Maybe we see a move here, but I don't know. What do you think, Tusa?
Well, I mean, just to add to that, we have gold and silver coming up around there. They're struggling to make new highs. Well, I shouldn't say struggling. Silver doesn't seem to have any problem with that, but both of them are kind of on the higher end right now, and it's a similar concept in that if they pull back, this could definitely there'd be a lot of downside. Now, I personally, I'm with you in that I like sleeping at night, and but I also like being able to go to the bathroom during the day, so I guess I'm kind of a little bit different in that regard. So from the day trading standpoint, but the way with which we're positioning in this is that we have several oil stocks that we're in, but we got puts. So I mean, if we do have something, we're prepared for it. But hopefully, Just things work out in the stocks, and I don't think it's good for our country in general if we do have $200 a barrel oil. I think pretty much anyone with half a brain would agree with me on that one. So I'm definitely hoping that oil does not go up quite that much.
Yeah, Uncle Mike, isn't it true? Isn't that what your clients are paying you for? Aren't they paying you to stay up all night and not sleep so they can in turn sleep? Isn't that your job?
Well, no, I sleep during the day.
Oh, there we go. There we go.
That's good Reagan. I like that. Well...
Yeah, I tend to agree about the upside with oil, that once it gets north of, around the 150 level or above, we see some serious economic blowback in all other parts of the economy. And I have this argument a lot with people who are aggressive or who are a lot of long-term bulls in oil that, I think some of what we saw in 2008, 2009 with that meltdown, obviously there were quite a few other factors at work, not the least of which being the credit crisis and everything else, but we saw that there was, I think, some resistance on the upside in oil, where once you get to a certain level, the economic factors in other areas of the economy start to slow down so much that it just tends to slow down the demand for oil as well. So I think if people talking about maybe a short-term spike to the upside of $200 in oil, maybe that could be foreseeable in the short term, but there's no way that could persist for long term without any sort of global economic ramifications on just an amazing scale. I think the 70s were bad when people were lining up for gas. I mean, everyone will be riding mopeds and bikes if oil's at 200 for, maybe that's not a bad thing. I don't know, depending on your environmental views, but that would definitely have some severe blowback for the rest of the world. And of course,
I kind of agree with you. I sold a Honda Civic over the weekend that we had sitting in front of our house for a year. Yes, I live in the South Side. And I put it up on Craigslist. I had 5 responding people within 25 minutes. Okay, the guy wanted to come out Friday. I said I couldn't do it Sunday. He showed up Sunday with cash, test drove it for a half hour, and was gone. And I go, well, why are you buying this? He goes, oh, we're getting rid of our Subaru Forester. It only gets 20 miles a gallon. We wanted something that gets over 30. And I was like, all right. I mean, guess I should have raised the price a little bit. But yeah, it does seem like people are believing, and I'm with them, that we're going to have $5 gas this summer. I mean, we're at $3.70, $3.75 right now in February at a time where it should be at its low. They haven't even switched over to the ethanol blend yet. It's going to be for a long summer.
Yeah.
Well, I think this is a good thing for society when you think about it, because let's say, Americans were too fat and food prices are up right now, so maybe that'll make us eat less. Oil prices are up, so maybe that'll make us walk and ride our bikes a little bit instead. So I think in the long run, this could be a good thing for the health of our country.
That's a great point.
And hey, if it gets a few of those massive Hummers, massive Hummers and all those other tanks off the road, I think we'd all be better off. I for one don't relish the idea of some soccer mom plowing into me with her massive Hummer and just rolling over my nice little 28-mile-a-gallon car. But yeah, Mr. Sebastian, what are you looking at for the around the block?
I think everything leads up to kind of what happens in Saudi Arabia, what happens to Libya this week. It's going to really end up being that. And I think that's all that really matters. When I'm looking at kind of just globally, it is all 100% oil related. I don't think you can really put much past that. If you want to look at economic indicators, maybe look at the jobless claims and business inventories. Treasury holdings is kind of interesting, but we don't have a ton of data. Maybe consumer confidence. Wouldn't be shocked if Michigan consumer confidence comes in really bad after we've this gas price hike. And I'm guessing that there's some analysts that are a little slow to update that consumer confidence number. Just a theory. So that's another thing that maybe could put a drive in. But, right now I'm telling people I don't think that we're going to be too busy this week. And plan on getting out of your March before Friday. April, May, you got time. But I'm looking to exit my March positions prior to any type of large Saudi Arabian protest. Generally, one of my rules. So.
maybe we'll see if that $35 billion the Saudis spent to quell uprisings, if that was money well spent or not. I know we have oil inventories coming up, I believe, tomorrow, so that might be interesting to see how that impacts some of these oil prices going forward. Of course, oils are not really moving on fundamentals right now.
No, they're not.
All right, and that's going to do it for this Around the Block session. I want to thank all of our partners in crime for joining me on this session today. Starting off with you, Mr. Sebastian, Mr. Greasy Meatball himself, Mr. Mini Metals. What do you have coming up at thegreasymeatball.com? I mean,
OptionPit.com. Well, I'm actually getting a webinar in about 3 minutes for the ISC. You can catch a replay there. It's called Trading Against or For Against the Trend. And then next Wednesday at OptionPit.com, we're doing our first free webinar in our series of free webinars. It's going to be trading calendars. They're going to be the Wednesday before expiration every month going forward, and I'd strongly encourage you guys to come out and listen to me. So everybody else does. Why wouldn't you? You know, at least that's what my mom tells me. So, all right.
And then you, Uncle Mike, what is going on over at Know Your Options, Inc. this week?
Well, actually, I'm going to some real mountains later this week, and I'll talk a little bit more about it on Thursday. With all the mountains that exist in Illinois, you know how that goes. But we'll be in Phoenix. Options Express is doing their event in Phoenix, and I will be there. I will be speaking during the noon hour. And for those of you people in the desert mountains of Phoenix, feel free to come out. Love to meet all of you.
Phoenix, well known for its craggy peaks.
Camelback Mountains.
The eagles soaring well above the desert tundra of Phoenix. And Mr. Grigas, what is going on over at OX for the rest of this week?
Not much. Like I said, we're trying to get some more feedback on OX Social, so check it out. And you can ask me directly or go through the show through Mark Longo, Options Insider, or weeklies too. The CBOE and the other exchanges continue to add weeklies. We'd like to think that Options Express would be quote unquote your place for weeklies. We were one of the first ones to roll them out simultaneously with the exchanges. They are a very popular product. They continue to add more each week. And hopefully, eventually, they'll have the majority of the big securities on weeklies. Right now, I think it's in the neighborhood of 60 different securities, but I'd have to check my math because they literally change it every 2 to 3 days. Other than that, as Tusaw mentioned, the Phoenix Live event, he'll be out there, and I plan on doing one of those myself in early September. Whenever they go out to San Francisco, I'll be out there. So, San Francisco listeners, set your calendar. I'll let you know.
Got to get your sourdough.
Got to get the sourdough. Got to go to Fisherman's Wharf. Got to, go up to Muir Woods and do some hiking. Love it out there.
And, of course, if you want to catch up on any of the unusual activity or some of the news or any of the other elements we discussed on this show, surf on over to theoptionsinsider.com. You'll find all of that and more up on the website. You also find the forum there, where you can post your questions and your comments for the hosts. Again, you can also reach us on the voicemail 312-544-9356 or via Twitter, either at twitter.com/options or twitter.com/optionblock if you want to send something specifically to this show. And Uncle Mike, what was your Twitter handle there again?
No Options, KNOW Options.
So you can hit up Uncle Mike directly on Twitter with No Options. Maybe you can do instead of the 18-minute portfolio review, you can do the Twitter portfolio review. That can be your new marketing slogan.
Ooh, I like it.
We'll review your stocks via Twitter. And, of course, you can always find OX on Twitter as well. And that's going to do it for this episode of The Option Block. I want to thank all of you for listening and downloading and streaming this show, and we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.